Well, it's official. China is now on track to reach a record 20% EV penetration rate this year after the country doubled its EV sales last November and December. This insane growth was driven by a 169% surge in EV sales in all of 2021, which included a bunch of new cars sold from arguably the two biggest EV automakers outside of Tesla, NIO and Xpeng Motors. And it looks like the stock market is finally realizing the great deals both these EV stocks are after NIO rallied a monster 17% on Monday. But now that the latest delivery numbers are out for both stocks along with the bombshell Tesla earnings from last week, we're getting a much better idea about just how sustainable this EV growth in China actually might be. In this video, I'll be analyzing the January delivery data for both NIO and Xpeng, comparing their upcoming catalysts, and at the end, I'll break down both stock charts to get an idea for how close we might be to a bottom. But before we get into it, guys, make sure to drop me a thumbs up and hit that subscribe button if you haven't already. If we start off with the January delivery numbers, you guys can see that NIO definitely had some pretty impressive numbers come out with a growth of around 33% year over year. But yet again, we're seeing that Xpeng Motors is outperforming NIO in terms of just how quickly they're growing their EV deliveries after they reported a rate of around 115% compared to January of 2021. Now, if you compare this growth rate to the growth rate that these companies announced in November and December of last year, you guys can see that the growth rate has definitely gone down quite a bit. Xpeng reported a 263% growth in November of 2021, whereas NIO reported a growth rate of around 105% in November as well. And as we all know, these year-over-year growth rates are not seasonal because month-over-month growth rates often are very seasonal because people tend to buy cars at different times of the year. So what this tells me that China reported a very big boom in 2021, which is slowly going to start to fade away over the next few years given these growth rate numbers. But as we all know, that is completely normal because the auto industry is a cyclical industry, meaning that it has big rallies in this demand and it has big declines in its demand as well. And this is actually a similar thing with Tesla because Tesla experienced a big boom in 2020 and 2021 as so many people had extra money because of the stimulus checks. And generally speaking, the cyclical nature of the auto industry is best fought by having a big variety in where you're selling your cars. And this is the big reason why Tesla has been succeeding so much in their delivery growth rates, even though Xpeng and NIO have seen some slight decreases. Because Tesla obviously sells in the US and Europe as well, which is why for me the big expansion that NIO and Xpeng both are expected to see into Norway over the next year or so, and obviously the rest of Europe, is going to be a big tailwind for both of these companies as it allows these guys to completely diversify their revenue streams. Because different countries often operate at different cyclical cycles, which means that if China is pulling back in their EV adoption, you'll maybe see countries like Norway or Germany actually increase their adoption rate. And that should definitely even out a lot of the volatility that we see in the delivery numbers from some of the big Chinese automakers. And as you guys can see, the Chinese New Year holiday is also starting to come up at the end of this month and at the start of February, which means that we should be seeing some declines in growth rates for both NIO and Xpeng, and the delivery numbers should be taking a hit. But again, this does not affect the backlog that both of these companies have, which right now is very strong because obviously Chinese consumers want to invest and buy EVs very fast. If we now look at the actual breakdowns of cars that both NIO and Xpeng sold, you guys can see that NIO has obviously been delivering primarily its SUVs in the form of their ES8, their ES6, and their ESC. Whereas Xpeng delivered around 4,000 of their newly announced P5 smart sedans and an increase of around 81% in their P7 midsize sedan deliveries. And this right here is probably the biggest reason why NIO has been struggling to keep its cash burn at bay and to please more investors in the United States, because right now NIO is primarily selling these SUVs instead of these ET5 and ET7 sedans. Because as we all know, in China, SUVs are not that popular and sedans generally sell better than SUVs, as we see from the Tesla Model 3 and Model Y. And so at some point in time, we will see a saturation in the EV SUV market, and at some point NIO is definitely going to have to shift into some of the higher margin cars like their ET5 and the ET7. And so these launches that these guys are going to be announcing in 2022 are going to be pretty important for NIO and should definitely act as a pivotal moment for US investors and potentially more institutional support for its stock. Whereas for Xpeng right now, we're seeing a very nice growth in the amount of cars they're delivering for their P5, which is their $25,000 EV in China. They sold around 4,000 units of the P5 in January, and that's up from around 2,000 units delivered in November, which goes to show that consumers want to buy cheap EVs when they can. And in my opinion, this car should be produced at very high volume for Xpeng and should allow these guys to become much more profitable over the next few years and get their cash flow situation sorted out. And as you guys can see, at least from a unit perspective, NIO is definitely struggling more recently to sell its cars as compared to Xpeng or even Li Auto, and that's probably the biggest reason why the stock price has struggled so much. Xpeng has had a pretty consistent uptrend over the past couple of years after we saw a nice dip in February of 2021, whereas NIO in blue has obviously had a little bit more choppy 2021 as they had a pretty big delivery cut in October and their December numbers came out lower than their November numbers. Whereas as you guys can see, Xpeng and Li Auto both reported some good growth in their November to December deliveries. And this right here also brings us to a very important point, which is that in February 2021, we saw a very big decline in the sales for basically every single automaker. And this is something you guys should expect next month as well when these companies report their following delivery numbers, because February 2021 is typically a big holiday season for the Chinese and people are not going to go out of their way to buy electric cars all of a sudden. But it does look like companies like Xpeng are planning ahead of this by scheduling a production downtime over the Chinese New Year. If we now move on over to the stocks for both Xpeng on the left and NIO on the right, you guys can see that the lines that I drew in my last NIO and Xpeng update video were broken through, and as a result, both stocks ended up tanking very aggressively. And as you guys can see, both RSIs hit some very critical oversold levels, which is exactly why we're seeing this very nice bounce in both stocks, because people are realizing that these stocks should not be oversold as they are, because both companies are growing at an insane rate, and the Chinese EV market is obviously going to be a big proponent of even Tesla's earnings. And so at scale, both of these companies should become very profitable, and US investors are definitely going to realize that sooner rather than later. But now to answer the major question as to whether or not we've hit a bottom in both of these stocks, in the short term at least, we definitely have. Because as you guys can see on the weekly closes, we saw these very big wicks at the bottom, which show a lot of buying pressure for both of these companies. Although Xpeng definitely has a better chance of hitting a bottom here because the 50-day moving average is trading well above that 200-day moving average, which means that this stock right now is in a medium-term uptrend. Whereas for NIO, obviously, it's been a very tough 2021 where we've seen this inversion of the 50-day moving average and now falling below the 200-day moving average, which tells me that it should act as a very strong resistance level and that the stock might have a very hard time breaking above that area. So unless we can get above this $33 region and then break above this trend line right here, NIO might still stay in a downtrend. And it's actually a similar story for Xpeng because it's broken out of this very aggressive trend line on the bottom. So what it needs to do is it needs to reclaim that and then fill this gap at around 40 bucks. But with the volume that both of these stocks have traded over the past few days, this should not be that hard of a task. But in case both of these stocks continue to fall and bleed over the next few weeks, the best entry prices that I'm looking at for Xpeng Motors specifically would be around 25 bucks and for NIO around that $15 region if we break below this prior low. And if we get below the $15 region, unfortunately, I see a pretty big sell-off coming to potentially around that $11 area. But generally speaking, given the strength that we saw in Tesla's earnings report, I don't think that the EV sector is going to get battered as much as it did over the past month. And obviously, a lot of the China fear and FUD has also waned out of the media, which tells me that 2022 should be a much calmer year for investors in the Chinese EV sector than 2021. But anyways guys, make sure to drop me a thumbs up if you found some value from this video. Let me know down in the comment section below how many shares of NIO or Xpeng you guys own. But anyways guys, I hope you enjoyed this video and I'll catch you guys in the next one. Take care.